Hey, what's going on, everybody? Lamont here, one more time. Probably the last time, I hope. I don't know. Ideally, Dano gets his internet connection back up and running soon. But let's just go over the market as we have over the last week or so. So there's really no change today. I was thinking that there was the potential for the jobs data today to, move the market a little bit, but it really didn't. And if you recall from yesterday, we were talking about the potential that even if the market did move today on this morning's data, that, tomorrow morning is really the big data, right? NFP will know the unemployment situation. And as we've been discussing throughout this week, that's really what the market cares about right now, right? The market, and J Powell has been very transparent about what the Fed is looking to get done, what the Fed feels like is the current standing of the economy. And so, the market is pretty much in this holding pattern after that initial exuberance from the Wednesday meeting. I think that was this day, right? I forget the initial exuberance of the last FOMC meeting. The way that I'm perceiving it is essentially the market wants to essentially see whether or not J Powell is correct, right? If the jobs numbers continues to look okay, then this rate cycle will be okay. It should be theoretically be good for the markets, right? Because everybody kind of benefits from cheaper money when the economy is strong, right? If you have to offer money cheaper to stimulate the economy because the economy is not doing so well, then that doesn't bode well for the economy. That doesn't bode well for the market, right? Because the market is essentially, looking, it's trying to price in what the economy is going to look like a few months ahead of time, right? The economy is obviously different from the market, of course, but they are related to each other in that way. So tomorrow, the jobs number is essentially like the market trying to see if J Powell is right. They're asking to prove it essentially, right? And so holding over the prior all-time high at 565.16 again is still very healthy consolidation. Even if selling enters the market with a negative reaction, which I wouldn't be surprised by that, right? Like even if we get a good reading, this move up could have been pricing in a good number, right? And so if that is the case and the number is good, well, we might get a sell the news kind of a situation. And even if that's going to be the case, I still think this consolidation will be healthy again as long as we're holding over this 819 and 830 structure. Okay, this guy over here, pretty much the same as this guy over here. They're roughly the same, telling you a very similar story. This guy, of course, being the prior all-time high supply. As long as we're holding over the prior all-time high supply, well, then things are just fine for buyers. All right. So I do have this developing value area and point of control that's I put onto this local area of balance here, just to kind of assess who is edging out right now. And you have to call it for what it is. Within this local daily balance, the sellers are edging out right now because the sellers have prevented the buyers from coming up to test this point of control, the developing point of control, for 2 sessions in a row now. And they have made many attempts probing below the developing value area low. So despite the fact that we are just balancing and that the balance is healthy as long as we're holding over 565.16, and call it exactly for what it is, bullish relative to the prior all-time high, but within this local structure as of right now, the sellers have a slight edge. Okay, so that's pretty much it for SPY. Moving on to the Qs. So I put the developing value area and point of control on this daily range as well for the Qs. Again, no change, just pretty much an inside bar today after a brief break over yesterday's regular trading hours high. Saw no follow through. And then we just chopped around again. Again, we're probably just waiting on that data. The market really only cares about this right now, right? Like from a fundamental perspective, that's because for a long time we were wondering, okay, are they going to cut? How much are they going to cut? That was the uncertainty that the market was looking at, right? And now the uncertainty is the economy okay? Or is the economy okay? What kind of cuts are we going to see in the future? So that's really it. So it's the same dealio here. It's slightly different, but it's the same dealio. Relative to this local daily balance here, the sellers are edging out, right? Because again, if you zoom in, yes, the buyers have been able to overcome the point of control, but the buyers have also failed to come test the developing value area high, and the sellers have pierced the developing value area low many times. Now, again, slight edge to the sellers within this local range, but bigger picture, buyers are doing just fine, knocking on the all-time high supply and holding over back tests of this 815 to 830 structure, right? So even if we see selling tomorrow, if we can hold over the point of control, 474.40, that would be the best case scenario. 496.29 is the key upside reference here. It's the point of control of this key supply here. Need to find acceptance over 496.29 in order to affirm this all-time high structure as demand, which would then, of course, greatly increase the potential of us breaking to new highs, because holding over the point of control where the most volume was traded in this supply zone would affirm this as then demand, right? Getting over the point of control would affirm it as demand. Holding over it, of course, would mean that higher prices relative to this structure right now are being accepted. That's just a matter of fact, right? Like, it's a very straightforward way of looking at the market, you know? There's no indicators, you know, there's no whatever. It's very straightforward, you know. There's a lot less room for subjectivity. Not no room for subjectivity. There certainly is still room for subjectivity, but there's a lot less room for subjectivity. But if it's not your cup of tea, no problem. Totally understand. There's a million ways to get this done, and that's fine. You know, if you prefer to approach it in a different way, that's fine. So anyway, space for a daily lower high to be set. Anything under 493.70 is going to be good for one. And technically, because we did break over yesterday's high, this daily bounce is underway. No follow through on that break whatsoever. So the high of the day, 484.55, has the potential to be a daily lower high being set tomorrow if these sellers can break under 478.99. But they'll have to break under 477.40 in order to confirm a daily downtrend. And again, even if they confirm that daily downtrend, what I care about is 474.40. That's it. That's how I do it. It's much easier for me, but yeah, maybe not for you. And so anyway, we're moving on to the hourly time frame. Yeah, and this is exactly like the kind of thing that I like to avoid, right? So I'm addressing a comment. Somebody said keep it simple. You know, just do higher lows, lower highs. It's not that simple. There's nuance to every single concept, right? Like the longer that you study any kind of subject, the more nuance that you see in it, right? It's like a PhD candidate, for example, right? Like a PhD, if this is everything that we know about like math, right? Here's this circle, everything we know about math, and you get a PhD furthering our understanding of math, relative to that, right? Like the change of this circle with this new PhD holder is like that. Did you notice the change in size? No, because it's barely noticeable, right? But what that PhD project or whatever thesis reveals and contributes to the whole knowledge, right, group or whatever, is a tiny little nuance, right? You see what I'm saying? So any concept that you look at, especially with trading, the longer that you think on these ideas, the longer that you experience the implications of these ideas, these sentiments, the more nuance you begin to understand. Like the example that I like to bring up very often is risk management, right? When you're a beginner, you don't even know what risk management is. You don't even really think about risk management, right? And then you start trading a bit, maybe you get wrecked a little bit, and then you start, you know, somebody says, hey man, how do you manage your risk? And you're like, what the heck is that? And then maybe they say, oh, well, how do you set your stops? Right? And then so for a long time, your idea of what a stop loss is just, of what risk management is just setting your stop, right? Just setting a stop for each trade. And that is fine, right? That is one way of looking at risk management. But what about account risk, right? Like right now you're managing trade risk, right? What about account risk, right? What about correlational risk, right? What about your emotional psychological risk, right? What about the time that you risk? You see what I'm saying? Like all of these things come into risk management. They fall under risk management, right? And every single trader, you have to manage all of these risks, right? Especially if you earn, you know, like if you have like loved ones that are affected by your trading, right? You need to make sure that you're managing all this risk appropriately so that you're not like over trading in the sense of taking too many trades, but also over trading in the sense that you're focusing too much on the trading and not enough on your relationships, right? That's all a matter of risk management, you know? And so anyway, that's the idea. And so when you look at higher lows and lower highs, you can see in this local hourly structure why that can be problematic at times, right? Because you have a higher low here, right? Lower high, higher low, higher high, lower low, higher low, higher high, kind of lower low, same candle, lower high, lower low, no follow through. So as much as we would like to keep things simple, and I think I do like to keep things simple, but as much as we would like to keep things as simple as possible, unfortunately, life is not simple. Life is complex, and there's a lot of nuance. So, you know, that's the way that I look at it. If it works for you, it works for you. More power to you. That's fine. Anyway, so that's pretty much it. For the Qs, I still really, there's no change from yesterday, you know, so I really just care about 474.40, 496.29. Moving on to IWM. So IWM, this is the only chart of the major. I know there's like the Dow is also a major sector, but I don't really chart the Dow. I really don't really care about SPY, QQQ, and IWM. So out of those three major sectors or major indexes, whatever, this is the only one that made significant change, right? So we have acceptance, and there's meaningful change in many ways. The first way is that we broke down under this range. They failed to find acceptance back over, I should say, the value area low, right? So value moved lower, and it was a clean break of value lower because you can see how much space there is between today's value area high over here and yesterday's value area low. A clean break of value lower, that's the best kind of scenario for a seller, just like this clean break of value lower was the best case scenario for a seller. So there's change from a session to session perspective, especially because, I mean, you know, the close is pretty flat, right? It's actually the open is the close is flat relative to the open, but we did see decline. So, you know, it's kind of a doji. It's an indecisive candle, but you call for what it is: session to session, value move lower, and I think it's very notable that the buyers failed to come back test this 217.38 level. Remember, this 217.38 point of control is this guy over here, right? This is the point of control of this structure over here. As long as we're under 217.38, then this guy is being affirmed as supply, which obviously is not good because we want to hold this guy as demand in order to have a go at all of this overhead supply sitting at the all-time high for IWM, you know? So that is pretty much it. As long as we're under 217.38, the sellers should be trying to come here, the value area low at 211.48. And if you give me extension into this area again, I would be open to another play here, right? We shared this play in the public updates for IWM a few weeks ago, this guy over here, and I continue to maintain this is a very reasonable location to be looking for trades as long as there's extension into this area. All right. So that's pretty much it for Bitcoin. I mean, for IWM. Moving on to Bitcoin here. Okay, so Bitcoin broke this point of control, broke back under this high at 60660. Obviously, a bit of a red flag for these sellers, for these buyers here. But at the same time, the sellers have failed to get back down to their next objective here at 59456.26. So you call it exactly for what it is. Still just a battle between this demand zone and this supply zone. All right, lots of space for a daily lower high. Anything under 66550 is going to be good for that daily lower high. And that is really it. I don't really care to do anything with Bitcoin for the most part. There's no extension anymore, right? So I was fine with taking that play over here off 61003.36 when there was extension. But now that there is no longer extension, I really would prefer to just be at the extremes of this range. So fading breaks of this high, I would prefer to fade breaks of the lows, honestly, because bigger picture, you look on the weekly time frame, and this chart is still very constructive on the weekly time frame, higher time frames, as long as you're holding over this demand zone. So I would prefer to stick with the buyers. You know, I would prefer to look for breaks, new lows that don't see follow through when there's extension, and then just look to try to play to the other side of range again. Obviously, take partials on the way up to the other side of range if the market allows you to, and you front load your risk. But you know, anything else, I don't really love that. So that's the only thing that I'm interested doing in Bitcoin in the near term. Moving on to gold. So gold probably also just in this holding pattern, similar to SPY, QQQ, whatever, because you know, if their recession fears do come into fruition, like if a recession does come into fruition, I should say, the fears are already here, but at least for some people, then gold should continue to stay strong, right? And gold has actually, you know, the fact that gold continues to stay strong, even though, you know, the Fed is signaling there's not going to be a recession, is notable, right? The gold market kind of seemingly doesn't, you know, gold doesn't need the market to be weak and the economy to be weak to see strength. But, you know, the fact that it is seeing a lot of strength, you know, it's not the best look for the soft landing thesis. Now, that being said, TLT, the bonds, they kind of do support that recession is maybe not coming, because the bonds, while they did have a big old rip for some time, they are not coming off the highs pretty significantly. So, you know, we shall see. So this consolidation is still very healthy on the lower time frame, if you recall. On the 4-hour time frame, as long as you're holding over this guy, which is what we discussed yesterday, and lo and behold, there was a buying opportunity for you off of that structure here today. Again, the key components for any trade that I do, at least, extension into location. I think there's probably lower time frame extension into here, but the location is very clear. All right. So that is pretty much it. Bigger picture, we care about this guy. There's a lot more value established here. And so the buyers want to continue to hold over this guy because holding over here means we don't come into this demand. Holding over this demand means we don't come into this demand, which means bigger picture, these buyers are doing just fine. All right. Moving on to oil. So oil clawing their way back up over this daily no change level 71.46, level 71.63. So now at this point, if you do not have any position and you are interested as a buyer, you're waiting to see if these buyers can press above this 71.46 level 71.63, such that a back test of this, and I think we've already discussed this, would get these things extended. Again, extension into location. This is definitely the location that you want to be looking at for a buy because this is the local demand zone. If we hold over this local demand zone, it's pretty much the same as holding over this guy. Once we broke out of here, where do we go? We tested the key supply that has contained price since 2022. And what do? We just tested the local demand that's been supportive of price since 2021. So what are the buyers trying to get done here? They're trying to go to infinity. On their way to infinity, they have these structures on the way, this guy and this guy. Okay, so acceptance over this local daily demand zone will increase the potential of these buyers continuing to try to go for a test of the key supply with its point of control at 96.37. So if no position right now, I would personally wait, let these buyers prove it a little bit more, and then look for that back test play down here for oil. Nat gas, just pretty much an inside bar today, no change. I'm still really only interested in here, and I'm not really even that interested. I don't really trade nat gas that often at all. It's been years, I think. But this is definitely the most reasonable location for potential trade if you're looking for a buy, because this daily demand zone, all of this over here, needs to hold price if they're going to stay constructive, right? Just like this demand zone had to hold price over here if they wanted to stay constructive relative to this structure over here, right? That's just logical, right? That just makes sense, right? And no market escapes this. The financial markets are just like any other market, right? There is supply and demand, and then there's perceived supply, or rather there's supply and demand, right? And there's the perception of supply and demand. People are looking forward into what supply and demand will look like in the future, and all of that comes together to form the markets, right? So that's really it, right? This is the key area of change. Extension into here is very reasonable, and you really just be looking to play, for a hold over this demand zone to continue seeing balance within this guy. All right, so that is it. And then finally for the dollar here, so the dollar, like I was saying throughout the week, this is the trade zone, this is the location. There wasn't as good extension heading into it throughout over here unless you were playing the lower time frames, looking for a responsive trade within this daily range. So clearly now we've broken over it, but buyers still not out of the woods, right? The oil is a bit ahead of the dollar here in that they are finding acceptance over that daily breakdown level, right? So CL looking very similar, finding acceptance over 71.46, whereas the dollar hasn't quite yet made it back over the lows of this breakdown. So 101.965 continues to be the key spot for the buyers, the key objective for these buyers to try to overcome. And I'm also watching this fellow over here. This guy is what made these lows over here and these lows over here. Point of control is at 102.145. I would say need acceptance over here in order to stay constructive relative to this. And if we get constructive relative to this, we should expect a test of the supply over here. So dollar buyers, any buyers down here, if you use this trade zone, you should be waiting for no later than a test of 101.965, which we already got pretty much, to be taking partials out if you front loaded your risk and throw your stop under the local low and then see what the market will give you. That's it. That is it, my friends. So, calm before the storm. Tomorrow, data should pick up. Data should move the market. I would be surprised if it did it, but we'll take it one moment at a time. So that's pretty much it. Appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. If you wouldn't mind hitting us up with a like or subscribe, that would help us out a lot. Costs you nothing. And that's pretty much it. So again, I appreciate you sharing some of your time and energy with me. And I hope to see y'all soon. Farewell.